So Peter Schiff, the well-known CEO and chief global strategist of Euro-Pacific Capital, is a guy that I've followed for a very long time. He's savvy. He's an investor. He's made a lot of money in the market in commodities. He's accrued a huge net worth, and he's in the news all the time. So yeah, he's kind of a big deal. Recently, his name came up in one of the mini reports I read here to help give you the absolute best read on the economy in our cozy little studio. And this one you'll want to pay attention to, especially if you are someone who wants to protect their wealth. That's the point of today's video. It's an alert for all you investors. Now, Peter Schiff recently urged Americans to get ready for what he quotes, a major dollar decline. Wait, what? Hasn't the dollar been declining enough with inflation? Haven't you guys been seeing this? I mean, I know what I spend in the supermarket. I know what I spend to keep the lights on, the family fed, and the big gas-guzzling Bronco that's all kicked up with 37-inch tires rocking down the streets of Weston, Florida. And I know you guys, if you live in the USA, your purchasing power has declined in recent years, but where is this going? Where are we going with the dollar? Now look, the gloomy outlook for the greenback has come as no surprise to those who understand Schiff's gold-first investing philosophy. He's very transparent about being a gold bug, kind of like we are. And you guys know I've been saying on this channel that the dollar is weakening, and I've been moving to gold to weather the storm. I think it's going to last a couple of years. There's no secret about what we do here. I got into gold around 1800. Now, in this podcast appearance, which he did with Patrick Bet-David, he said this: I think gold is telling us that the dollar is going down again. And this time, it's going down for the count, like one of Mike Tyson's early opponents. He didn't say that. I said that. Gold prices soared to record highs in early April, fueled by central banks bolstering their bullion reserves amid geopolitical tensions. We got a lot of them. Read the news. Now, he went on to say this: I think the dollar is going to be knocked off its pedestal. I think it's going to lose its status as the reserve currency. Schiff is predicting a phenomenon known as de-dollarization. Talked about that many times on this channel. When countries shift away from the greenback as a reserve currency, medium of exchange, or unit of account. Now, it's true that the dollar has experienced a slow decline in recent years. The IMF data shows this, and the greenback's share of global allocated foreign exchange reserves has fallen by around 7% since early 2016. But to be fair, the central banks still rely heavily on the US dollar, with the currency accounting for 58.41% of reserves in the fourth quarter of 2023, compared to the euro coming in at just under 20%, the Japanese won at 5.7%, the British pound sterling at 4.84%, and Chinese yuan at 2.29%. Rather than losing its global reserve thrown to another currency, Schiff is more interested in data that shows central banks are ditching the dollar in favor of a shinier and more stable alternative, and that's obviously gold. Now, banks, as I've said many times, are buying gold at a breakneck pace. It's incredible what they're doing right now. The price of gold hit an all-time high in April, and it's still going up from here. And there's a lot of room for it to go higher. Just read around people's predictions all over the board. And of course, according to the WGC Council, head of central banks, Shokai Fan, he believes so too. He told CNBC in March, quote, central banks who have bought historic levels of gold over the past 2 years continue to be strong buyers in 2024 as well. So the stock market's here, gold's here. That's never happened before. There are many reasons why central banks continue to turn to this precious metal, and according again to the WGC, gold reserves are attractive because of gold's proven value in crisis response. A lot of that going on right now. Also, its diversification attributes and its ability to retain its value long-term, and most importantly, hedge against inflation. Now, if you're convinced by Schiff's argument that the end of the dollar is high, there are simple ways to copy exactly what the central banks are doing and shore up your investment portfolio with gold. For example, you could open a gold IRA, like Greg and I both did. We've said this in our past videos. Check it out. It's a type of individual retirement account that allows you to invest in gold and other precious metals. You can roll over your 401k, your PSP, any pension you have. There's a link below if you want to check that out and see some companies that we do endorse. You could put coins instead of stocks and mutual funds and traditional investments in there. This gives you the opportunity to both diversify your portfolio and stabilize your finances. And gold tends to yield less risk than other alternative investments. You don't have to be all in on mutual funds, stocks, bonds, etc. Schiff also warned about buying what he calls risky assets, and by this, he means Bitcoin and tech stocks. Tech stocks usually aren't risky, but in this case, he thinks they are, and said this on X, formerly known as Twitter, that gold is down over $50 this morning as investors pile back into risk assets like tech stocks and Bitcoin. But the real risk is inflation. I agree with him here. And he goes on to say, so investors should be buying gold and not selling it. The miners will be even better buys as share prices always overreacted to a gold drop. Now, you guys know that I'm a transparent person. I'm in gold, I'm in silver, I'm in Bitcoin, I'm in gold mining companies, and a lot of cryptocurrency altcoins. One area I'm not playing right now is the S&P. Yes, it's been on a tear, and I know I'm going to get shredded in the comments below. I'm going to get slacked from you guys. We're making tons of money in the market. If you are, great for you, but be careful. This is the first time gold has been at a record high, while the S&P just keeps on cooking. Smell that? That's what the rock is cooking. Imagine what it's going to do when the S&P tanks. Seriously, which in my opinion is going to happen as precious metals trade inversely to the stock markets. So what we're seeing right now is something that's absolutely wild. Bitcoin just halved and should continue to charge up to over 100K per Bitcoin. Write that down. I'm going on record saying that Bitcoin will reach over $100,000 per coin this year. However, in 2025, the crypto market should cool off at some point. And by then, I see the stock market being totally flat, a total mess after the election, and the lone survivor here being gold. Again, write this down. These are my predictions. I know I'm going to be very close to right. We're in an election year. Elections always cause market turbulence. Turbulence makes the gold skyrocket. The 2000 stock market caused an overall drop of 7%. In 2008, we went down a staggering 36%. The Dow Jones went down 313 points the day after Obama was elected in 2012. So be very cautious, stack gold, and do not be all in on the stock market. That's today's video. Let me know your thoughts in the comments below, and make sure to write down my predictions. Seriously, call me out on them, tap me on the back if I'm right, hit me in the butt if I'm wrong. I don't care. A lot of time goes into our research we do here at the Hunker Bunker, so please make sure to subscribe and know that we've always got your back.